Good morning, good afternoon, good evening. Once again, welcome back to Dan's Trades. I appreciate you coming out. As always, I am not a financial advisor. This is not financial advice, not selling anything whatsoever, purely me documenting my trading activity and doing some video journaling with the hopes that it helps some other traders along the way. So do your own research. There is risk in the markets, and make sure you read these. All right, that out of the way, we'll take a look at, this is when I had Camtasia fired up finally, get it into the charts. So this is, I'll start playing this. I'll set it up here. So this is the raw footage one more time from this morning. Currently it is 11:45 a.m. my time. This is 9:37 New York time when this recording took place, right after the bell. So this is the opening range gap right here. The midpoint isn't even on the screen, because it was such a large run up overnight that I was honestly fighting myself because it was too large of a range. I should not be trading it per my rules, but yet I saw that price was definitely going where I expected it to, and it was just a matter of trying to get in at a good spot. So that's what I was trying to do here, but then I was mentally battling myself. We'll start playing this, let it go, and I'll kind of talk through it. And just some, to be honest, horrible stop placements, horrible trade management. I shouldn't say trade management because I never got it. So this is where I'm like, nope, don't even take it. It's too large. Even if it does go, it's fine. So I mapped out all of these areas even before price got up here, which was literally blew my mind this morning. So those are volume imbalances from the daily chart. There's actually 1, 2, 3, 4 of them. The top 3 overlap. Very interesting that that's where price turned and came back down. And then, so there's the 20,371 is midpoint of the opening range gap for today. So I'm going through time frames. I'll switch over to electronic trading hours. You see that's where the gap started. There's our opening. So we have our first presentation of a fair value gap on a 1-minute chart is right here. Let's draw that guy in. So in my mind, I'm thinking, well, if price comes back up to this, I can short from here. That's some more valid shorting opportunity. But price never got all the way up there for me. So I started looking back at the smaller time frame charts, looking to see what we're seeing from a price action standpoint, looking at trading through that volume imbalance. We're on a 15-second chart. I do like the way price is reacting off of that. I'm trying to tape read, but my impulse gets the better of me, and I believe I'm going to enter another one. I actually haven't been in a trade yet here, so this is all. So there's an immediate rebalance potential, but it's coming back up and tagging the bottom of that volume imbalance. Labeling this, today's Thursday. It looks a lot tighter because there's such a large range. So if you look at the price over on the right, it's much more exaggerated than typical. So that would have been a beautiful entry there right in that volume imbalance. Obviously I'm not in. My original entry was right on this one, so that one would have worked had I just left it, but that's why I would tape read. Immediate rebalance, I like that, and I entered 2-3 seconds after I should have, looking at the take profit at the opening range gap midpoint, putting a stop right above that fair value gap. And I'm also looking, and I don't draw everything again as I say, so I can annotate this after the fact. This inversion fair value gap also lined up perfectly with the entry. So if you're looking for somewhere to hunt to get an entry, don't always just look at the price like that's in action for a fair value gap to enter. Look on the other side. Inversion fair value gap right here, entry. That blew my mind the first time I saw it. Maybe that'll help one or two of you anywhere. So we're in the trade, we're up 30 some ticks. This is where my stop management is going to get atrocious. So I'm fighting mentally whether I should even be in this trade at all because of the large opening range gap. It's above normal. I'm like 250 ticks just to halfway. And I didn't even get it nowhere near the top. So this is part of, and I'm a little early again. We see the time is 9:41. Before the 9:50 macro, we're still in that opening range time frame. 9:30 to 10 is the opening range. But price is respecting that fair value gap. Went up and tapped it right where the entry is there. Now we're going to come up through it, it looks like. And this is where I get a little crazy. So a lot of people probably wouldn't show you this part. Maybe that's smart. Maybe you don't. Maybe I shouldn't show this, but I'm doing this to maybe help people that are trying to get a grasp of their trading. But again, this is real life. $9.42. Price continuing to move up. Now I'm thinking, what about CE of that wick up here? Is what I'm looking at, because I got a tiny fair value gap that price could come back and reprice into to make it efficient. 91 ticks, a little bit over my usual 80. So I'm looking at that, and I'm just anticipating price to make a run down below this low. Well, I'd like to see it break that. This could be an order block. I'll smash together these since these are 15-second charts, but look at all these wicks. So price was, it definitely wasn't friendly this morning. The market's not going to be friendly. This is just me trying to learn patience better, so. Which isn't working, but the more I review myself, the better it will be. So now I'm thinking, if I wanted to be all the way above that volume imbalance, that'd be kind of crazy. If it goes that far, I shouldn't even be in it because it's probably going to go higher. But I'm not seeing great price signatures that I do want to see. Hovering right around my entry area, which is exactly why you want to enter on the up close candle, not the down close candle like I did. This is a great example of trying to have confirmation and having your entry too low. This whole thing could have been in profit for me the whole time had I entered when I originally thought of entering, which was back well, let's just see how it plays out. 9:45 coming up. And mind you, I'm doing something I shouldn't do. I'm still holding that stop. I actually haven't let go of the mouse to drop it. It's still active at the 60 ticks where it originally was when I clicked on it. So just because I'm moving it doesn't mean that that stop is actually active anywhere. So if anyone is thinking that that is true, then that is not true, because you'll actually see it play out where I'm literally holding it. I'm anticipating price to drop so I can drop it into break even, which is a horrible thing to do. So I'm now up above CE. So if price were to fly up to my original 60, it still would execute because that's what's in the market. Just because I'm moving this without releasing the mouse doesn't send another order to the market until I complete the click, basically, and lift up on the mouse button. Since I'm holding it down, it's still not a live order with the broker until I drop it, basically. So I'm thinking, I'd like to drop it right there because the price would spike down below. I'd be fine with that, is my thought process right now. But I see I'm right in the fair value gap, so it could come up and tap it. See right there, you see? It didn't trigger my order because it's not an order. Just because I'm hovering it there doesn't mean anything. It's not until you see me release it is where it's going to be a valid stop loss again, which I'm horribly moving around. So there, it should have taken me out there had I left. It didn't actually hit the 60 still. It just came right up before it. Did you see that? So my original stop at 60, and then I see the fair value gaps getting rebalanced or repriced into. Please don't call me on the exact terminology. I'm not teaching. This is just me leveraging ICT concepts as I know them. And now I sold two more contracts. I want to place a partial if we get a nice rundown, which is what I'm anticipating as the macro is coming around. So there, I'll buy 2 more back cover and then 2 more at the opening range gap is my thought process. But I'm sitting here watching it, and I'm mentally battling myself where I'm doing things I don't want to do anymore. So I just cut the trade. I take it right there. I mean, that's perfectly fine. I don't care what it does. I'm not trading by the rules, so I get out. Tiny profit. I debate on going back in because it looks like another rebalance, but I think better of it. Reposition myself. Had I known, hindsight's 2020. Yeah, we all know that it ripped a lot far lower down, and we'll see later on. This recording does go for over an hour. I'm not going to make you guys sit through that, but that's just part of how I scalped, ultra scalped, not by the rules, not by my own rules, and battling my own emotions on this massive run up. And I was very surprised to see what price did overnight in the few hours that I actually slept, because I didn't go to bed till after midnight. So it was a crazy London session for sure. Nothing but buys overnight. So I'm thinking about getting in again right as the macro's coming, but I believe I do not. We'll just make sure I do not. Yeah, I'm pretty sure I don't. I know when I do, it's much later. It's the next macro. So I sit through a whole hour thinking about this, reviewing what I did, what price is done. So it's always good practice. So that's why I'm reviewing as well. So I'm just curious to watch this 950. There's what I was looking for. Price swept down. Taking out all those stops. People thinking that those double, triple bottoms are going to be support. Well, good try on that support. We went right through them. To it and through it, right? And now I'm looking, we've covered a lot of distance from the top already. So I'm trying not to chase price. Don't want to chase price. One more minute to the macro. Let's just see how the macro plays out in my thought process here. Now we're tapping that red box. I know there's a lot of red backgrounds here. So if you look at your higher time frame charts, at the daily and the weekly, that's what this is. So this is the bottom of the daily fair value gap, and this is inside a weekly fair value gap, which is why it's not just black and why you see we're in different areas. So I know I'm trading inside daily and weekly SIBIs right now. So price just broke below the daily and into the weekly. And that's what those other dotted lines are, consequent encroachments of different fair value gaps. So it's interesting to see how price keys off of these exact levels numerous times, which leads to the theories around the algorithmic price delivery. So back to a 1 minute chart, 45 second, 15 second, 950. We're in the macro now, and it looks like the macro might be going higher, so I'm not crazy about that. Got a volume imbalance right here, fair value gap up here, could be a breakaway gap. And then price just moves away, so I can't. I was waiting for a spike up, hopefully into that the higher fair value gap to get a better entry. So there were very few entries that were easy in this price run, at least for me. So there's a better view. So there's the bottom of that weekly fair value gap. There's the opening range gap, and there's where we opened. So we see I'll show you where the executions were. 433, 445, then covered at 430. So covered just below my first entry, which is a horrible entry. And then just to see where the orders were. So bad entry, a better entry because I was actually on the up close on the 15-second of the pyramiding in, or pillaring in if you want to call it that, because that was 2 and 2. It's more of a pillar versus a pyramid. And then just a quick cover because I wasn't trading by the rules. So we'll fast forward this a little bit. Won't make us sit through all of this. Let's see where it gets interesting again. Looking at multiple areas. Did draw in prices there. There's where price actually hits the opening range gap. So mission accomplished for that part of the model. And then let's cruise back over. What time is it? 10:35. We'll start watching from about 10:45 here. Let's see what we're seeing. Price has already come way down. Look at that. So I drew in a couple fair value gaps that the first trades were based off of, and here's what basically the best case scenario that I could see after the fact, which is, as I mentioned, wasn't easy to read, but there was a nice fair value gap after price broke below that daily fair value gap and then just touched it, came back in. That would have been a beautiful trade there with the patience, but it's hard to find that, and it's not at a macro time, so that's the other part that's not as easy. Not every trade executes at the exact same time, I have found in my back testing at least, but taking a picture of this, saving that from my journal, sharing it with a few friends, and thinking we got the next macro coming, so let's cruise forward a few more minutes here. Get ready for 1050 macro. So that was the trade up there, higher up. Price is displacing down once again. Now I'm looking at the NDOG down here from Thursday, September 26th. That's this morning's NDOG. Not going to chase it, but we're going to look for a potential entry in there. Nice fair value gap. We have a nice tiny one up here that we tapped into and moved. Broke this one. So I like that fair value gap as we're coming up to the right time again. And let's just watch this play out. Exaggerated moves make it very interesting. Yeah, it might look like a lot of lines to the untrained eye, but it makes sense to me. So find out whatever makes sense for you. I'm looking at a full gap closure and a trade back to some NDOGs is my trade framework here, looking right there. That's nice IO Fed potential. We're going to get in, jump in that. Hit it. I honestly don't remember when I hit it. This is the first time I'm reviewing this part. 15-second chart. I like entering on 15s. Let's see if I can. It's right inside that fair value gap. 10. I'm trying to wait till 1050. See if we do get one more spike up potentially. Right now we're in that inversion fair value gap. All right, we're in the macro now. It's 1050 officially. like to enter on an up close candle, selling short as it takes out right there. Thinking about putting an order. There we go. All right, we're in. Move the stop. This is all based on the chart and not just 80. So I'm getting this set. I will adjust that accordingly. We're not going to leave a stop at 140, trust me. I see one more fair value gap up above. Enter on that. Okay, now we're in 2. I'm going to take a trade off below, modify this to 4. A lot of things all happen at the same time. All right, trade's beautifully working in my favor already. So I got the buy stop up there at 4. And 2 buy limits below. And looking for lower prices. So I want to fill in, or feel the magnet of the NDOG down there and the bottom of the opening range gap. So 70 ticks, beautiful. Want to see price drive right through that. Just smash my buy limit order. There it did. So now we got to modify the stop, put it back to 2. Actually, I closed it by accident, so this kind of flustered me for a second. So I'm like, I just want to put a stop on, but I don't want to screw up my orders. So I made it bigger than the original one. You'll see me do it right here. And then I killed that original order since I had a new stop, and then moved this one down to protect my profits. So every broker is a little bit different. And we're going to put that right above the NDOG. Expecting to go right through it. And we have the August 2024 old buy side liquidity. Very interesting that price stopped and turned around right there. Must be random. So now we're just going to sit here and watch. Tiny little 15-second up close candle. Then price spools again, lower low, smashing through that August level. Trail the stop down. CE of the up close candle over here. And above the fair value gap right here. We could reprice into. That's an inefficiency. But now we have to submit to time. And just patiently wait. That's a nice move. Thank you. Like to see continuation. Keep smashing it. Roll the stop down. Right below CE of that wick of the up close candle. Protecting profits. Fast moving market. Another lower low. It's great to see. Tiny inefficiency. Could not. There we go. Just reached into that inefficiency and repriced into it. And then we move lower. Closing below that August. That's a good sign. We want to see it make another lower low here. Price is just hovering, so I'm debating. Okay, didn't make a lower low. I might close it. Just watching. We're still only 4 minutes into the macro. See if we can get some more spooling. So you see the difference here of watching the 15 seconds, even on the exits now, where the 1 minute would take, obviously 4 times the amount of gyration in price. 3, 2, 1, next candle. We're still below. That's what we want to see. New lower low, I feel good about that. And nice nice expansion below, and it's just trying to tease me. Patience on a 15-second chart. Boom. Crushes right through that NDOG, keeps crushing right down. To it and through it, brother. That's what we want to see. All right, so that was a beautiful trade. One of my personal best trades in a long time. So thank you once again, ICT. Thank you, Jesus. Thank you, thank you, thank you. Remember, tomorrow is promised for none of us. Live for today. Take care.